the focus of today's class, let me first talk about the focus of this class. The focus must be the promise, I think, what's the prospect of natural gas, right, for global LNG. This I think, title itself, I think, raises a lot of interesting questions, because this author indicates that still, I think, U.S. revolution, gas revolution, it's amazing, right, surprising, and game-changing, right? But again, there's a lot of uncertainty, right? So the title, I think, indicates, what's the prospect for natural gas, right? What's the prospect of it for global LNG, right? I think this must be, I think, the better title, right? And what's the current status, and what's the prospect? It's very difficult to predict what will happen several years down the road. Very difficult, right? And even the two key things, U.S. natural gas market, right? U.S. natural gas market changes driven by shale technological revolution. That's one thing, right? Then revolving around U.S. shale revolution, global gas market, global LNG market is shifting, right? These two things, right? These are closely linked. Although U.S. shale revolution does not represent 100% changes, because there are other, right, changes in addition to U.S. changes. But U.S. change is at the center. That's very clear, right? So it's important to understand the shale, U.S. shale revolution. Then what's the impact of the U.S. shale revolution on the global LNG market? That's next step, right? What's the impact? This author, I think, he discusses three aspects of the impact, right? Number one, energy security aspect. Second, geopolitics. Third, environmental aspect. The three aspects. Each, I think, requires a lot of discussion. But this author, I think, he summarizes pretty well on each aspect. So we are going to cover those, right? U.S. shale revolution, its impact, then the global LNG market dynamics. All these things, I think, should be done in this chapter. Now, like I said, I mean, the purpose of this chapter, first, the origins of shale revolution, right? Where and how did the U.S. shale revolution begin, right? Then the impact. What's the impact of it, right? The economy, impact on the economy. The economy, I think he doesn't cover as a subtitle, right? He just mentioned the impact on the economy just in passing, right? But he doesn't discuss it on a fuller scale. But the economic impact of the shale revolution, it's one of the emerging topics. I think we need to add that into, to the three types of, changes due to shale revolution. The economic change due to shale gas revolution, in a nutshell, I think probably better to put it in terms of the third industrial revolution. Third industrial revolution, right? In other words, energy revolution does not end as an energy revolution. Energy revolution comes with industrial revolution. If you look back toward past history, right? many epochal economic changes come with economic changes. Come with energy changes, energy technology changes, right? 19th century, the rise of coal as a central energy source. 20th century, the rise of oil, right? 21st century, the rise of natural gas. In each energy technological change, new industrial powers rise. That's industrial revolution. So the shale revolution is maybe become a harbinger for next industrial changes, right? But this chapter doesn't discuss that in detail. Environment, we'll discuss that. We'll discuss that. And this chapter discussed this a little bit. Right? Geopolitics, very interesting. Very, very interesting. I think most important changes, geopolitical changes, due to shale gas. This chapter discusses, decrease in Russian influence on Europe, right? But again, he's not sure again about where this geopolitical change will evolve. He's not sure. Maybe the recent, conflicts over Ukraine, that might be related to, this Europe-Russian energy relations and U.S. shale revolution impacting EU-Russian energy relations. Ukraine is just in between Europe and Russia. That's why Ukraine is important, right? So it might be, again, interesting paper topic if you analyze the role of Ukraine in Russian energy policy toward the EU. Then why at the moment Ukraine is important. What was the role of LNG market changes, shale gas? Why Ukraine is important for Russia? Why Ukraine is important for the US, for Europe? That's something that we need to look more into. Okay. The central argument, this author makes clear that the central argument of this chapter are as follows. As I repeated, right? Shale innovations are real and profound changes, okay? But it's an American affair. It's an American revolution still. He's not sure whether this can be spread on a global scale, right? Because still there are many obstacles down the road. Things can easily could go wrong, right? Because particularly when they copy U.S. technology outside the United States, right? There are so many, right, obstacles. Right. I think this is, U.S. shale revolution and its potential exports outside the United States. This is one of raising debates. But to understand this, we need to understand first what are success factors in the U.S. shale revolution. What made U.S. shale revolution possible? Number one, maybe technology, right? R&D investment, right? And geology. There's so many things you need to consider. Geology, In other words, U.S. geological formations are much easier, potentially, than in China, maybe. Right? This is outside the boundary of our knowledge. Maybe geologists, they know much better, right? But to make shale evolution successful, geological characteristics are very important. But U.S. geological characteristics are very favorable, maybe than in other countries, right? And so technology, geology, and regulation. In other words, this may be more important, maybe more important than even technology and geology. In other words, U.S. shale evolution was made possible because of unique U.S. energy system, U.S. energy-related regulatory system, which is not present in China when they copy, right? Which is not present in Latin America, not in Russia, right? Then what are these unique U.S. regulatory system that made shale evolution possible? Right? Private property rights. Private property rights. And U.S. energy system, you need to understand the U.S. energy system a little bit, right? The U.S. energy system. The U.S. energy system, where the government there, right? Then institutional mechanism, if you look at the U.S. energy institutional mechanism, you have huge major oil and gas corporations, right? But then you have smaller, thousands of smaller gas companies, right? And these big companies, so big companies, smaller companies. Big companies called major corporations. Smaller companies called independent companies. What's the difference? The difference is these major corporations are casually called vertically integrated companies. Vertically integrated. In other words, usually oil and gas companies, oil and gas business, there are three areas. Three areas. Upstream, midstream, downstream. Upstream meaning exploration, okay? Geological survey, then excavation. That's exploration, okay? Dig it up first. That's upstream. Production, okay? Productions, that's upstream. Midstream, transportation, okay? Transportation. Downstream, distribution. Distribution, like selling to customers. So there are three areas of business, oil and gas business. And these major corporations, they are vertically integrated because they have all branch companies in all these three areas of business. That's major corporations like ExxonMobil, right, BP, Chevron, okay? They're all active in all the three areas, okay? That's why they are vertically integrated. That's why they are major corporations. But remember, U.S. gas revolution, U.S. shale revolution was not driven by the major corporations. This is important. U.S. shale revolution is driven by independent, smaller independent companies. This is important. So this is uniquely American style gas revolution, shale revolution. Okay? It's not BP that discovered shale formation in Texas. It's not Chevron. Okay? It's not Shell. Right? It's not ExxonMobil. It is unknown to the public. It's companies like Chesapeake, okay, Devon Energy. There's so many smaller independent companies. So those companies, but still big in terms of revenue. Okay, they're still big, right? Not in the list of global 500, but still very big. Okay, but they have either only in extreme, upstream or downstream or midstream. Okay, they are not in all three business areas, either one of these three areas. That's why they are called independent companies, right? So for instance, Chesapeake, they're mostly focusing on exploration, production, okay? Production. They don't have transportation system. They don't have distribution mechanism, only production, right? So, shale revolution was made possible because of this unique U.S. like a energy company system. U.S. has thousands of small independent companies, and shale production requires guerrilla type, smaller scale production. Okay, it's not proper for huge, companies like Shell, Chevron, ExxonMobil. Much better. Okay, these smaller independent companies can do much better job of producing shale gas. So it was started by these independent U.S. independent companies, energy companies. Okay, so what I'm saying here is that when China attempts to copy, okay, the shale revolution, what will happen? Imagine what will happen. The Chinese energy system, right? Chinese energy system is dominated by three big state corporations, right? CNOC, right? CNPC. These are all big, right? National corporations. I'm not sure whether they can make U.S. type, guerrilla type shale revolution possible in China. So this is a regulatory problem, right? How the government governs the energy system. This is a regulatory problem, right? So U.S. shale revolution is uniquely American style, right? It's a product of uniquely American style energy system, regulatory mechanism. And America is also propped up by Wall Street, financial market. China doesn't have U.S. style financial market. Shale revolution requires huge investment. Right? There was Wall Street there, but China doesn't have it. Right? Or many Latin American countries. Brazil, Argentina, they have huge reserves of shale. But again, they lack these regulatory mechanisms. Not to speak of technology, right? Geology, I'm not sure about Latin American geology, but Chinese geology much unfavorable compared to U.S. geology. In other words, U.S. geology is favorable because shale formation is relatively closer to the surface, 3,000, 4,000 kilometers. But China, much deeper. Chinese shale geology, much deeper. So you must go deeper than U.S. In the case of China. Latin America, I need to look about the geology. But China, much more unfavorable. It might require more money, more investment. Right? So geologically, China has problems. Regulatory-wise, problems. And And funding is important. Funding, very important. And more than anything else, I think I mentioned this. The reason why U.S. shale revolution was so quickly proceeded, one of the reasons is that unique private property system. These shale fields, in many, particularly northeast, coast area, Pennsylvania, those regions. These shale fields are located in farm areas. Okay, so those landowners are farmers. So these U.S. independent shale companies, they study that underground there must be huge shale reserves. Then they go to these farmers. Okay, then they pay them in cash. Okay, that's it. Maybe 10 times or maybe 100 times, they don't care. They pay in cash in advance. So these farmers leave, then they begin to work. So that's how U.S. shale revolution began, right? But this kind of unique American private property system doesn't exist maybe outside the United States, China particularly. So, shale gas is not just a problem of technology and geology, but this kind of a regulatory system, very important, right? So if you don't understand this U.S. regulatory system, you more than likely to fail outside the United States, right? And I think this chapter discusses this. So many things could go wrong, right? If you go outside the United States, including geology, property rights, regulatory mechanism, many things. And technology is basic. You need to have technology first, right? Again, but that technology is also monopolized by U.S. companies. Okay. Anything else? Maybe I want to add water also, right? Shale gas revolution, water is key at the moment, at least at the moment, water, right? China, they are water deficient country. China is a water deficient country, right? So where could China can secure water? Enormous amount of water, right? For fracking. That's another problem. He's even not sure about energy security and geopolitical impact. He's also not sure, right? Even this is not sure. But first we need to understand what are geopolitical impacts of shale gas. What are energy security impact of shale gas? Environment benefits, but clear, he says. Geopolitical impacts, not clear, okay? Not clear. Some uncertainty, but environmental benefits, clear. There are evident environmental benefits. Yes, I think this requires a lot of discussion. A lot of discussion. But he says the environmental benefits are clear. But again, this must be also discussed. I'm not sure whether how clear that environmental benefit is. I don't know why he says, particularly about the environment, he's so clear. I'm not sure about that, because there are so many different arguments also. But the tone of this chapter is that geopolitical impacts, unclear. Environmental benefits, clear. And second, economic benefits are clear. That's sort of his style of argument. Economic benefits, the U.S. economy will be revived. I think that's what he's saying, right? The U.S. economy will be much more prosperous due to shale revolution. There's a job creation, right? Because of gas boom, there will be many more jobs will be created here and there, right? There are so many projects going on. I mean, these projects will, right, create jobs. Right? That'll lead to U.S. economic boom, manufacturing boom. That's important. One of the concerns of the U.S. economy was, much too financially oriented, right? Manufacturing, there's a manufacturing shortage, but this gas boom will create manufacturing boom in the United States. Okay. The reason being, the manufacturing jobs will be created, but the basic material for manufacturing production used to be naphtha, right? Something that is produced out of oil through petrochemical process. Okay, and due to shale revolution, American companies, they can make much cheaper gas-based material for manufacturing production. Right? Much cheaper than oil, petrochemical processing. So this is sort of a gas processing. Okay, there's new gas processing boom. Okay, and this gas material will be used for manufacturing production. So this will make U.S. products, manufacturing products, cheaper than foreign products. Right? Every manufacturing item, from car to TV to computer to every item. Okay, U.S. can gain in competitiveness, manufacturing competitiveness. So that's economic benefits. If you read newspapers, particularly from the European media, you might have read a lot of newspaper articles from several months ago that argue that a lot of Europeans are concerned about U.S. manufacturing, leading edge in U.S. manufacturing competitiveness due to shale revolution, gas boom. So that the industry that will benefit from this gas boom will be petrochemical industry, steel industry. Steel, they use a lot of this material for production. So steel industry, they will benefit. Petrochemical industry, they will benefit. And broadly, these two industries benefit most from this gas boom. And in general, most manufacturing industries will benefit. So that you will read from the newspaper articles that some European steel corporations, they relocate to the U.S. market. Okay, they build new steel factory in Louisiana, close to Texas, close to shale gas fields. So there were several European steel corporations that have announced that they will relocate in the United States. Japanese steel corporations, Sumitomo, they also announced they are going to build, steel factory near the Texas. Right? So that surprised many, business people. So we'll see how that will play out in the future. Okay, so now America is attracting companies. Even U.S. companies that relocated outside the United States, they are coming back. Okay, they are coming back because there is so much natural gas, cheaper natural gas available within the United States. They are coming back. They are moving factories back to the United States. Right? So this is how U.S. industrial revival is expected in the near future. If gas boom continues, okay, if gas boom continues, so that's what he's talking about. So geopolitical impacts are unclear, but environmental impacts, economic impacts are relatively clear and present. Environmental benefits, he's talking about climate change impact, right? Climate change impact. Natural gas cleaner than 75% cleaner than coal, 50% cleaner than oil. Right, that's what he's talking about. On the face of it, very obvious. I mean, natural gas cleaner than both oil and coal. But there are caveats there. Some scholars argue that natural gas doesn't emit as much CO2 as coal and oil, but natural gas emits other, bad, materials like methane, right? So there are CO2 and methane. Okay, natural gas. Much part of natural gas is methane. Methane is even more harmful than CO2. Once they are trapped in the atmosphere. So there are many studies on the impact of methane on climate change, right? Coming from natural gas. So if we use more natural gas, maybe the impact on climate change even worse, according to some. So that environmental benefits are not as clear as he argues. So we need to look into this debate. There are so many different studies and debates, arguments on this. Okay? And this chapter goes into some details of this debate. But from the U.S. perspective, in his view, there is a debate in the United States whether to use this new additional natural gas internally or to export it, which serves U.S. interests better. That's the argument raising in the United States. If America has excess amount of natural gas, what to do with it, right? That's the debate. Should America use it or should America export it? His view is better for the U.S. to export it, right? And even share the technology with other countries. That serves the U.S. interests. Again, we have very different views on this, divisive views on this, right? There are pros and cons. Some scholars argue that, if America exports natural gas, that's harmful for U.S. national interests, because if America exports natural gas, U.S. domestic natural gas prices will increase, right? That will weaken U.S. manufacturing industry. I mean, no doubt, right? Particularly those who are against these U.S. exports of natural gas are those manufacturing companies in the U.S. Manufacturing companies, they are against U.S. LNG exports, right? they are in favor of cheaper natural gas in the United States. They think that U.S. exports will lead to the increase in natural gas prices in the U.S. Right? So they are against U.S. LNG exports. But for those who are for U.S. LNG exports, their argument is, I think, similar to his argument. Number one, U.S. can make more money out of exports, more job creation. And there must be some bigger interests by selling natural gas, bigger geopolitical interests. By exporting LNG, America can weaken Russian power, right? Both in Europe and in Russia. Those are bigger interests. So again, there's a debate on that. U.S. has a compelling interest in having this technology spread quickly. Again, this is a controversial aspect also. I mean, should the U.S. share that technology? How quickly, with whom, right? Again, the biggest debate is about U.S.-China shale gas technology cooperation. Right? China is still blocked from access to shale technology. Right? America doesn't share this shale technology with China. Right? So this argument, I'm not sure. Maybe different from company perspective, from government perspective. And if you talk to business people working in Texas, they say that they have many Chinese investors coming to Texas. Those who are interested in joint venture with American companies in developing shale gas in Texas and different places. And these business people say that there is no regulation they know of. There is no regulation in the U.S. that blocks any company, whether from China or even Russia. There's no regulation in terms of blocking these companies from accessing any type of development, joint venture. If they sign a joint venture, they can have some access to technology. But if you talk to these business people, there's no regulation, no limit. But if you talk to Chinese people, it's a different story, very different story, right? So China is still blocked from getting this technology. But frankly speaking, I think over the long term, in terms of how to use this fantastic technology, right? New gas development technology, how to use it, how to make the most of it, I think the U.S. need to discuss very hard about this, right? At the moment, yes, I think there must be bigger geopolitical considerations in giving this technology to China. But over the long term, I think the benefit of China moving to clean energy, moving to wider consumption of natural gas, I think that's something that's very valuable, right, from the U.S. perspective, over the long term. But in the short term, America seems to be blocking this technology, right, for some countries. This is his view. The fate of the gas revolution, which is still uncertain, right? The fate of gas revolution depends on national investment and drilling policies. Drilling policies in other countries. The fate of the gas revolution. The fate of gas revolution. I think this is very, this is a huge question, right? Where the shale revolution will go from now on. This is a highly, highly controversial issue. Now, the most difficult test is China, right? Whether or not China will be successful on shale revolution. This is the most difficult test. Right? Something that will have a huge impact on the global LNG market, geopolitics, energy security, right? China has just begun the initial process of shale revolution, the initial process, okay? But whether this will go on or stop, we don't know yet, right? Until when, you know, and when the commercial revolution, commercial production begins in China, right, if successful. For the US, 2009 was the commercial production period. And many expect 2020 will be the commercial production period for China. 2020, like 6 years later, right? Okay. And then this textbook covers a little bit of history, okay? History of the gas industry. Because, again, a little bit of background information, right? To understand the gas market, a little bit of historical background of how the gas market evolved. Global gas market and the US gas market. The US gas market, very complex, right? And sort of a topsy-turvy history. There's so many ups and downs, right? There's a boom period, then bust period, right? But the thing is, there's a huge gap today in terms of the global gas market, the way the US develops, the way, you know, non-US gas market develops goes like this way, right? There's a huge difference. The US market, the big difference about the US market is the US market is a sort of a liberalized, free, competitive gas market. That's the US market. Probably that's why gas revolution occurred, okay? But outside the US, exactly the opposite. A little bit of reform attempts, but most of them still get stuck in middle road, right? Even European gas market, right? Not successful about gas market reform. That's the difference, right? So the question is, the global gas market, if we talk about the global gas market, given this huge gap between American market and non-American market, could we have a global natural gas market? Right? That's the question. How could we have a global natural gas market, global scale? Oil market, like I said, oil market is relatively open. There's a global oil market. And oil is a global commodity, according to this chapter. Oil is a global commodity. But gas, natural gas, is not a global commodity yet. There is no global gas market, right? LNG is central, right? LNG is central. In natural gas become a global commodity, LNG is central, right? Without LNG, natural gas cannot become a global commodity, right? LNG makes natural gas a global commodity. And LNG market is rapidly growing, right? So there is some prospect for the rise of global gas market. The market is developing very quickly. Okay, so the rest of time, in the remaining time, I want to, maybe quickly go over this information from the textbook. Then I'm going to cover some of the information about how global natural gas market, global LNG market is quickly shifting now. I'm going to cover that after we quickly go over this. For most of history, gas was supplementary. Okay, gas has been a poor stepchild in the oil industry. Oil was the central energy. Okay, gas was just supplementary. And gas price was indexed to oil prices. Okay, because of that. There is no standalone gas industry and gas price. Okay. The reason being gas has a problem. Okay, gas has a problem. It is flammable, and also mostly it's a transportable problem. Okay, gas has a lot of limitations in terms of transportation. So that's why the gas market, developed. So that still, even today, a lot of natural gas is being flared, like I said last time, right? Even if you go to Bakken today in the United States, there's so much natural gas produced, but this natural gas is simply being flared. It's useless, no value. Okay, they would rather use oil, okay, and liquids than dump these natural gas. Still, which shows that the market for natural gas has yet to develop. Why? Why does the global gas market not rise? Two reasons. There are two reasons according to this chapter. There are two reasons why limitations to the development of gas market. First one is local markets, loosely divided local markets. Okay, there is no global market, no global gas price. And Asian gas price enormously high than European gas price, American gas price. Right? So Asian premium. Right? Asian premium shows the underdevelopment of the gas market. Right? And oil indexed price. Gas price, there is no separate gas price. Gas price is calculated based on oil prices. Okay? Two reasons. Okay? There are two reasons for the underdevelopment of gas market. First one is gas market reform failure. Okay? A lot of countries outside the US, they have failed to reform the gas market, even in the European countries. So even in the UK, shift to gas market was very slow. and mostly, state-owned companies, they govern, natural gas market. Very slow. There are some moves, but very slow changes. Competitive gas market, competitive electricity market. Why gas market, electricity market closely connected? Why do you think gas market, electricity market always go together? Why? Yes.
Because to make the electricity, you need a gas or something, to generate the electricity.
Well, you have coal and even oil.
But
Electricity can be generated, through coal or coal firing or oil.
But according to what you said, gas right now is much more cheaper than oil or something. But of course, it's not cheap as coal right now. But in terms of environmental causes, it makes it's much better. So it's cheap, at the same time it's clean. So it makes sense actually.
Okay. So your argument is that the impact of natural gas consumption is much bigger in the electricity generation.
Yeah.
Is that what you're trying to say?
Yes.
Compared to what? Compared to
transportation.
transportation.
Yeah,
That's
this
exactly
book saying
right.
that
Right.
it's difficult to
Yes.
transform all of the
Yes.
stations.
You're right. You're right. You're right. Exactly. In other words, the current stage of natural gas consumption is not for transportation, right? NGV, natural gas vehicle, still distant future, right? So the immediate impact of natural gas consumption will be shown in the electricity generation, right? So that's why gas market, electricity market closely connected. And that's what happened in the US, right? Why shale revolution first broke out in the US? According to this chapter, in the 1990s, in the 1990s, US policymakers and businessmen, they decided to demolish many old coal and oil power plants. Instead, they have decided to build natural gas power plants in the 1990s in the United States. So, because of this, new additional power plants, natural gas consumption was expected. More natural gas consumption was expected. So, this prospect for natural gas consumption led to technological pressure, right? So we are going to use more natural gas in these power plants. Then these engineers, they get the cue from this. Then they began to develop better ways of extracting natural gas. Right? This is what happened in the U.S. And the government, gave out a lot of R&D money for shale technology already in the 80s and 90s. Then 2000, shale revolution peaked. But there was maybe 2 decades of gestation period for shale technology, 80s, 90s, 2 decades. And LNG power plants, right, construction, R&D investment, and 2000 boom. That's what happened in the US. Which is not the case outside the US. I'm not sure about the European countries. I saw some European countries in the 1990s also, there was a boom for natural gas power plants construction. No? I've read some, in some readings, some countries, in the 1990s. Some LNG power plant construction going on in some European countries. So natural gas consumption was on the rise, but not as much as in the United States. So most reforms were sort of get stuck in the middle ground. So the governments, there were laws, okay, there were legal grounds, but those state enterprises still dominant players, right? There was no market incentives in many European countries. So gas revolution doesn't start in Europe, whereas gas revolution occurred in the US. Right? That's the difference. And climate change negotiation, right, in parallel. Second reason for the limitation of gas market was that having to do with the cost of transportation, right? The cost of moving gas long distances, right? This was a stumbling block in the development of gas market, global gas market. So this is the difference between oil and gas. Oil has already become a global commodity, okay? Whereas in 2011, only 10% of global gas consumption by LNG. LNG portion, 10%. According to this chapter, although I have different number. LNG portion, much bigger than this, 2011. I think he's wrong. The author is wrong. LNG portion, 2011, already 30%. He's wrong. So LNG market is going much quicker, much more quickly than he assumes. So the share of LNG market is very important measure of global gas market development. Okay, now let's get to this information. We're going to look at the major global natural gas market structure. Okay, we need to understand how the global natural gas market is structured. Supply-demand structure. Okay, global supply-demand structure. As you can see here, global LNG trade is growing very fast. Okay. As of 2011, there was 8% increase. Okay, yearly, annual 8% increase. This is bigger than natural gas market increase, right? So natural gas market, LNG market, you have to separate these two. Natural gas market also growing, okay, but not as much as 8%. Okay, so LNG is much more growing than natural gas market. Okay. Total turnover. There are a lot of different numbers. Total turnover, 240 million ton. 240 million ton. Yeah, this is a huge amount. A huge amount. LNG trading. This is the entire volume of LNG trading as of 2011. Right? And this is 30% of the entire natural gas trading. So that's why this author is wrong. As of 2011, LNG accounted for 30% of the entire natural gas trading. Then what's the rest? PNG, 70%. Okay? Piped natural gas, 70%. LNG, 30%. Okay? That's 231 million ton. About 700 million ton PNG. Okay? About 700 million ton PNG. And the entire natural gas trading, 1,000 million ton. 1,000 million ton. 1,000 million ton. We need to get to this first. So let's look at the number for 2006. This is the number for 2006. 159 million ton. That's number for 2006. So 2006 was the jump start year. 2006 is the year when LNG and natural gas consumption began to grow like phenomenally. Okay, 2006 was the beginning year. Then 2011, between 2006 and 2011, 52% increase. There's a huge growth here, increase. In terms of number of LNG exporting countries, from 13 to 18, from 2006 to 2011. In terms of importing countries, 15 to 24. Right? So if you look at this, still natural gas, LNG is a very luxury good, very much luxury items. Right? So only 18 countries export, only 24 countries import, out of maybe 200 countries. But this will be enlarging, expanding to include much more countries. Maybe today, I have to look, today how many? There are many more than 24, many more than 18 today. Who is the largest exporter? Qatar. Qatar is the biggest exporter, number one. 75 million ton, about 30%. Qatar accounts for 30% of the entire export, LNG export. Then you have Malaysia, Indonesia. Then Australia. Combined to comprise 27%. These three countries. Then importer, Japan, number one. No doubt. Japan, number one. Korea, number two. Okay? Combined to account for 48% total demand. So Korea, China, 50% of the entire LNG market. Right? But how about this? Korea, China, Korea, Japan, 50% consumer, right? But we pay the highest price. How about that? We are the biggest consumers, but highest price. There is no discount. So we think that the market is so distorted, so much distorted. So we want to change it. We want to change the market in a way that gas prices go down. Now, next. Spot market, this is important to understand. The contractual practice is changing, right? One of the measurements for the development of LNG market is portion of spot market. But spot market is growing, okay? Spot market is growing. LNG is traditionally traded through long-term contracts. Okay, and these long-term contracts are leading to replaced by like a spot contracts, flexible contracts. This is the share of spot market. Much more flexible short-term contracts. 2004, 11%. 2010, 19%. 2006 was the turning point. Okay? 2011, 25%, which is about 62 million ton. 2012, approaching 30%. Right? So it's growing. Long-term contracts going down. Right? What does this mean? This means that the market is moving to sort of a demand market, right? Consumer market rather than supplier market. Consumer is having more power than supplier. Right? Pricing also changing. Pricing mechanism also changing. Look at this. There are three big markets: North American market, European market, and Asia Pacific market. Right? And North American market pricing is mostly, look at this, gas to gas competition. Okay, almost 100%, right? Free gas price, supply demand decided price. Right? Europe, 70% long-term oil indexed price. Only 30%, only about 30% gas competition price. Asia, much smaller. Right? Oil indexation, according to this, 52%. Gas to gas, free price, very small portion. So we want to reduce this. Our goal is to reduce this. Right? That's our goal. Let's look at how natural gas market evolved after the financial crisis and the Fukushima accident. Like 2009, 2010, 2011, those are important years for gas market development. Hub pricing, meaning U.S. natural gas market, is called Henry Hub price. U.S. market index, market price index is Henry Hub price. So hub pricing meaning American pricing. Henry Hub is U.S. gas price index. Okay, Henry Hub. 2008, 2009, after the financial crisis, due to global economic depression, global gas demand decreased by 3%. Okay, this was the beginning. Then late 2009, early 2010, due to cold winter, gas demand in Europe recovered. In the meantime, from early 2009, a gap between oil index pricing, okay, 70%, which is 70% of the case in Europe, and U.S. price, the gap began to appear. Okay, so oil index price became more than 2 times the U.S. price. Okay, Now, if the pricing system goes like this, in 2009, U.S. shale revolution succeeded, okay? Then what will happen based on this? In 2009, already there was a lot of natural gas available in excess in the U.S. market, okay? Which means that they don't import LNG from other countries, right? Other countries meaning from Qatar, from some African countries, Middle Eastern countries. U.S. does not import, right? Then U.S. gas prices went up, okay? U.S. gas prices went up. Then these Qatari sellers, right? They change directions. Then they go to the European market. Okay? These natural gas LNG shipments that are destined to the US change directions. Right? They would rather go to the European market. Right? That's the first step. Okay? LNG ships change directions, go to the European market. That's number one step. So for instance, US Henry Hub price continue to drop. NBP meaning UK natural gas price index, national balancing point. Okay? This is European natural gas price index. $9 per MMBTU. Okay? US price go below $4. Okay? Go below $4. Oil index price continue to rise. Let's, do we see here? This is what Jonathan Stern, the famous scholar of the Oxford Institute for Energy Studies, said. He said, the logic of linking gas prices to those of many oil products had largely disappeared. In the major European gas markets. Can you read? I can't.
A transition away from formal contractual oil product price linkage is inevitable and arguably has already begun with a great degree of spot gas pricing indexation in some long-term contracts.
Okay. Maybe we can go back to this later and first look at this. This is what happened. As a result of it, there is decrease in Russian exports to Europe because of this mechanism. European importers, they complain about Russian oil index pricing. There's a larger gap between spot pricing and Russian oil index pricing. Like this much. And this is Russian oil index price level. It went up even more, right? So late 2011, early 2012, there were a series of renegotiations of gas price between Gazprom, Russian gas company, and main European importers. European importers, they change directions and they began to increase import from LNG importers rather than from Russian PNG. So LNG share increased. European LNG share increased from 20% in 2009, 23.6% 2011 because of these price movements. So Gazprom decided to provide 50% of their European supply on cheaper spot price. Right? This is the loss for Gazprom. Instead, Russian exports to Asian countries, Russia decided to increase from 11 BCM to 44 BCM by 2020. Right. This is the change for LNG share. LNG share increase. Okay. For 2011. And increase export to Asia. 2009, November 2009, Russia announced new energy strategy, 2030. According to this energy strategy, they will diversify exports to Asian countries. In terms of oil, from 6% to 25%. Natural gas from 0 to 20%. This is contained in this new energy strategy. The pipeline that will provide oil to Asian countries is called ESPO. Gas, LNG. Okay? As of 2011, the portion of Russian oil imports for 3 Northeast Asian countries, Japan 4%, China 8%, South Korea 6%. Natural gas 9%, 0.5 BCM, almost 0 for China, Korea 9%. Right? So we are just in the middle of increasing to 20% and 25%. Right? And shale gas, I think, will impact on this plan also. Right? Whether or not Russia can increase all the way to 20%, 25%, that's something that is interesting to watch in the near future. Can we continue Thursday? Okay, continue Thursday. So read the other half, remaining half of chapter 3 for Thursday.